Hi, last night there was an important event. The US Fed had the meeting, and in the meeting, they took some actions and they spoke about the market developments, which is important for all the investors. Now, in this video, I'm going to tell you why US Fed is so important, what exactly happened last night, and how it is going to impact the global economy and the markets. So US Fed is the central bank of America. Like in India, we have Reserve Bank of India. Now, the mandate of the RBI is to control inflation. But in US Fed, the mandate of the Fed is to not only control inflation, but also to ensure that growth is good. Now, last night, the US Fed decided not to change the interest rates. It did not cut the interest rates. The interest rates in US continues to be at 4.25% to 4.5%. Now, generally, high interest rates are never good for stock market or global economy, because when there is a high interest rates, investor, when they're getting high rates in the deposit, the bonds, they prefer to put the money in safe instruments and they don't put the money in the stock market. So generally when the rates are high, the stock market doesn't do so well. Also, it also affects the growth of the economy, because when the deposit rates are high, the borrowing cost is also high. Currently, anyone in US and developed markets, they are borrowing at 7 to 8% in dollars. And when the borrowing cost is so high, people don't borrow and spend. Companies don't borrow and do capex. This generally affects the global growth. And there's a history behind it. So what happened is, after COVID, suddenly there was a lot of demand and inflation came in, and there was also Russia-Ukraine war, which made the energy prices high. So in 2022, the inflation in US and other markets started going up, because of which the US Fed had hiked the interest rates to 5.25 to 5.5%. And because of high interest rates, the global economy was slowing down and inflation also started coming down. So in the year 2024, the US Fed started cutting the rates. In 2024, it cut the rate by 1%, and last cut happened in December 2024, which was a 0.25% cut. There was an expectation that the rate cut will continue in 2025, but the problem came when Trump came in the power and he started talking about tariffs. Because of tariffs, the inflation again seems to be going up, because the price of good has been higher. So this was the reason what is happening. Now, what did Fed say last night? Now, one Fed said that the crisis of the tariffs is now coming down. The uncertainty has reduced, but it's still elevated, which means that it is going to watch. And according to US Fed, it is going to start cutting the rates in September of 2025, which is just 3 months away, and it is expected to cut 0.5% rate this year. And in 2026, it will further cut the rate by 0.25% if inflation stays low. Currently in US, the inflation is 2.35%. According to me, the interest rates in US is still high, because the interest rates is around 4.5% and inflation is 2.35%. This is going to slow the economy. We need rate cuts at a much faster pace. And because of higher rates in US, you have money market instruments or debt funds or bonds where investors have parked $7 trillion. That's a lot of money. We want rates to come down, because then this money will start moving to stock market and other aggressive investments. So this is what we want. Thankfully, the Fed has given an indication that in the coming months, it will be cutting rate. So it's pretty good, because in this meeting, no one was expecting the Fed to cut the rates. But investors, especially Indian investors, needs to watch the action of US Fed, because the US Fed decides the growth of the global economy and also the big movement of the stock market. Thank you so much.